Multiple factors, including silver's implied lease rate, spot versus futures price structure, backwardation. We're going to come to that in a minute. Daily price action, national mint, silver shortage, and now a surging borrow rate for SLV shares in New York are all now pointing to an intensifying global shortage of physical silver. Tuesday, October 7th, 2025, Monaco 64, home of alternative economics and contrarian views. Well, I tweeted yesterday the following. There's increasing talk of physical gold and silver shortage. Something big must be broken in the system. It means holders of gold and silver are unwilling to part with their gold and silver, and those who have none are desperate to get some at any price. Yes, it's concerning that there should be a shortage of gold and silver, especially gold, because all the gold really that's been ever mined in history, 99.9% of it, maybe a little less, is still above ground. Yes, there's been some that has been lost, treasures and stuff. But yeah, it shouldn't be difficult to get gold. So what is this telling us? Well, it's telling us that someone, and especially big money, very wealthy institutions or individuals, families, are concerned, and they don't just want unallocated gold from JP Morgan or the bullion banks. No, they want the physical, and I think this is why the price continues to surge, because they're having to find the physical. Paper won't do in a crisis like this. And what is the crisis? Well, we don't know yet, but I think it's ready to come out of left field, or maybe it's a crisis that people have been forecasting. Maybe it could be AI, and that's something we're going to cover here in a minute, because I have a really interesting video about AI, and I'll talk about it as well. So we've got Bob Coleman on X. He's Idaho Armored Vaults store. He's a precious metals dealer. He says borrowing fee to short SLV shares continues to rise. The rate now to borrow SLV shares is over 9%, while the availability of shares to borrow has flatlined near zero. So I've also got David Jensen, who I've had on many times on the channel. He reported yesterday cost to borrow SLV silver ETF shares surges today to 8.5% from 2.5%. And he says the following: the borrow fee for the iShares SLV Silver Trust Exchange Traded Fund or ETF have increased to 8.5% from 2.54% on Friday, October 2nd. According to the SLV prospectus, this ETF can operate as a source for bullion banks, authorized participants, not for you and me, of course, to secure physical silver in 50,000 ounce lots by tendering shares to obtain physical silver bars when desired, i.e. the metal is otherwise scarce in the market. By borrowing SLV shares, physical silver can be obtained by bullion banks and other authorized participants without moving the SLV share price higher. Multiple factors, including silver's implied lease rate, spot versus futures price structure, backwardation. We're going to come to that in a minute. Daily price action, national mint, silver shortage, and now a surging borrow rate for SLV shares in New York are all now pointing to an intensifying global shortage of physical silver. So what is backwardation? Well, it's when the spot price or the price for immediate delivery, so to speak, for gold and silver in this case is higher than the futures price, which means people want the physical now. They're not willing to wait. They don't trust the futures market to deliver. So the price goes higher, the spot price. Usually you have contango, the futures price is higher. And there used to be the late Antal Fekete, or Fekete, I'm not sure how you pronounce the name. He was a professor from Canada, and he analyzed the basis and backwardation. And he said that the fiat currency system would be under threat when we had permanent backwardation in gold and silver. It looks like we've got backwardation in silver, and how can we check that? Well, we need to go to the silver futures quotes on the CME, and the current front month for silver is the December futures, and the last price is 48.32, and the high overnight is 48.55. But if I check here on my system, my trading system, where I can bet on spot silver, the high overnight was 48.67, which is higher than 48.55. So silver is in backwardation. Gold not so much, but there's another bullion dealer here, and his name is Josh Philip Fair. He's the founder and CEO of Scottsdale Mint and co-founder and CEO of the Wyoming Reserve Opportunity Zone Fund Corporation. And he posted this on X yesterday, retail alert. So it's not just the big money or institutional clients going after physical gold and silver, and these shortages are not just in the US, they're everywhere around the world. People are concerned. So he says, whoa, most 7 and 8 figures retail orders in a day than I can remember. So 7-figure, that's at least $1 million. 8-figure, that's at least 10 million. So these are big retail investors. And he says premiums rising quickly. Secondary gold is starting to dwindle. Silver as well. And I've checked this morning here in the UK. The main bullion dealers like Atkinson's, we're not affiliated with Atkinson's, but they've got a lot of out of stock products. The other thing I've noticed over the last few weeks, they've got a permanent message on their website saying due to high demand, dispatch times could be delayed by up to 5 working days. So that's not normal. Gold Investments, who I'm affiliated with and I highly recommend. Yes, they've run out of some of the Britannias, but they do have 2026 gold Britannias for immediate delivery. So their sovereigns are there too. So I don't think it's too late to get out of Dodge or get out of fiat into gold. And if you want to find out more about the precious metals bull market, I'm going to put a link up here to an interview I did yesterday with Kevin Wadsworth from northcharts.com. He's a technical analyst, and they've been right about gold and silver for the last few years. And Kevin told me yesterday that he sees the precious metals bull market continuing for around 10 years, for the next decade. So as I said, it's not too late. It is going to get more and more expensive, though, to get gold and silver. But here in the UK, we're lucky that we can get half sovereigns or we can get sovereigns. So if you can't afford £3,000, which is what the 1 ounce Britannia is costing now, think about the sovereign and the half sovereign. I even think they have quarter sovereigns. Yes, the premium might be a bit bigger for those, but and also for silver, I wouldn't worry about the VAT because I think what silver is going to do when you look back 1 or 2 or 3 years from now, the VAT won't matter. And I can tell you that from personal experience. When I first bought silver in 03, the silver price was below £4. We're now at 36. And I noticed the VAT and I wasn't very happy with it. But does it matter now? 20% of £3.50 in today's price, it's irrelevant. So yeah, and stick to coins of the realm because they're capital gains tax exempt. So yeah, check out below in the description gold investments in the US. I'm affiliated with Andy Schectman and Miles Franklin, and I think yeah, they could help you as well with the fractional gold. There's a lot of pre-1933 gold coins that are very interesting, like the $5 gold coin, which is similar to the sovereign, or the $10 gold coin, which is just under half an ounce. So you don't have to buy an ounce of gold. So yeah, we need to keep an eye on this. And as I said, we don't know what the crisis is, but I'm hearing from friends who worked for a very long time in the financial sector, who are quite well connected, that yeah, they're and people who never were really into gold, who now are into gold, that people are scrambling for physical. They want physical. And that is a really bad sign for the credit financial market. And what could be the crisis? Well, I said it could be AI. And yesterday, one of my friends told me about this video interview here. And it's from 2 months ago and only has just under 1,000 views, but I think it's explosive. It's entitled, "Could AI Data Center Spending Blow Up the Economy?" With Paul Kudrowski, Tech Bubble Ride Home podcast. I'm going to put it up here too. It is 38 minutes worth listening to. So what is Paul Kudrowski saying? Well, expenditure, capital expenditure in AI and data centers corresponded to like half of GDP growth in the second quarter in the US. So aside from AI, the US economy is in the doldrums. So yes, it's keeping the economy going, but if AI turns, and if you watch my interview with Kevin from yesterday, I posted it late yesterday, which I usually don't. He shows us how the only sector that's really keeping the stock market from imploding is the tech sector. So watch that. Could it be something to do with AI? It's possible. The other thing Paul Kudrowski talks about is that a lot of the financing for AI is coming from private credit, private equity. It's not being done through the banking system, so it's very opaque. They keep it off balance sheet. So who knows? It could be something else. It could be war. I hope it's not war. And before we look at where the markets are, just wanted to go through another post here that I thought was really interesting on X. And this is from a French guy who I actually follow on X, and he's based out of China, Arnaud Bertrand. He's got 354,000 followers, and he's not really an economics guy, but he's a clever guy, and he said the following. Let's see when this was. Well, I think it was earlier today. I was studying other times in history when gold prices more than doubled in the reserve currency of the time, as they did in the past year versus the dollar, right? It's a rare and almost always a sign of a profound loss of confidence in the existing monetary and political order, going all the way back to the Roman Empire and the so-called crisis of the 3rd century. And it often marked the transition from one era of power to the next. The fall of Rome, Spain's decline from world power, the French Revolution and Terror, the end of the Bretton Woods, etc. Well, that was in the 70s, right? Interestingly, it's often actually as much a cause as a sign of these episodes, as this is effectively a transfer of real wealth from the poor to the rich elites who protect themselves with gold. This being what ignites the political upheaval. Well, we're not rich elites, are we? Fortunately, we've seen this coming for many years, and we've been acquiring a little bit of gold. We're not elites. We're not billionaires. So I'm not even sure if many of the rich elites are doing this. I don't think many of them will survive financially. But anyway, he concludes, the weird aspect of the current episode is the relative silence around it. We're witnessing what may be one of the great pivotal moments in financial history, yet it's been barely discussed. Well, it's been discussed here on my channel and other channels on the alternative side of things. And why isn't it being discussed in the mainstream? Well, because they don't understand gold. They don't look at history. They look back 5-10 years and that's it, or maybe the great financial crisis. They've got no notion of history and how important this current environment in the precious metals market is. So let's quickly go through the markets this morning. I'm a little later today, but not that late, 20 past 8 a.m. So yes, gold is coming off a little bit, but can't keep going up in a straight line in the short term all the time. We will see some corrections. Anyway, it's down only $10. We're at $39.50, right near the lows. The high's been $39.77. That's the spot price. Silver, yes, that's taking a bit of a dropping right now. It was around $48.30 when I started this video, this recording. It's now $48.02, down about 50 cents. And we know that the bullion banks are desperate, so they're going to do as much as they can through the paper market to get the price down. But I don't think it's going to work. I think we're going to go through 50 very soon, if not this week, by the end of the month, or maybe even by the end of next week. So yeah, we're right near the lows in silver. We're also seeing the stock market come off slightly. The currencies are off a little bit versus the dollar. The pound is down about 1/3%. The euro is down about 1/4%. And here in the UK, I've seen that we had bad house price numbers. Halifax house prices dropped month on month. That's not good for the economy. This probably one of the few things that's keeping the economy from collapsing. So yes, with that, I'm going to wish you all a very good day. Take care. Bye.